G'day everyone, welcome to the Digital Investor Podcast. I'm your host, Matt Raad, and today we are going to be looking at angel investing because we know a lot of you have questions around this. Mainly, what is angel investing? Can you make money out of it? Is it passive, or how passive is it? Who may it suit? Who may it not suit? What are the ins and outs? And also, if you're an entrepreneur and you're building up a business, what does it mean to bring on angel investors into your business? So I thought, who better than, but a friend of ours, good friend of Liz and mine, and also a colleague, Brian runs the Brisbane Angels. So Liz and I have been angel investors ourselves for many, many years, for the last decade or so. Brian actually runs the Brisbane Angels. Not only that, though, what's really interesting is Brian's significant background in mergers and acquisitions. Brian is a startup entrepreneur himself many years ago. Really important to this community, Brian started up an online business, took it to a public listing on the stock exchange, Australian Stock Exchange, was very successful there. He didn't rest on his laurels. He's been very successful in the corporate space, was a senior partner with PwC in mergers and acquisitions, doing billion-dollar deals. These days, he's a mergers and acquisitions advisor for mid-sized companies. Now, mid-size in Brian's world means companies around the $20 to $100 million range. So, Brian, I want to say a big welcome and thank you for coming along today. And I know you are very, very passionate about angel investing, as all of us are. But I want to say a big thank you for coming along today to talk about all things angel investing.
Not a problem, Matt. And thanks for the invite, and happy to be here and hopefully able to answer your questions clearly, succinctly, and share a bit of knowledge with some of your listeners.
Yeah, well, it's really cool to have you on because you do have so much experience around this angel investing space, and also venture capital and private equity as well, which we may, we're going to be touching on that throughout this interview. But to start out with, angel investing, if you had to explain to a beginner, what is angel investing? Top level first.
So at the very highest level, we're all very familiar with being able to hop onto CompSec or NabTrade and trade stocks and shares on the ASX. But there's a whole raft of companies across Australia which are private, meaning they're not listed on the stock exchange. And most of those private companies have to start somewhere. Mm-hmm. What angel investing is essentially the first check into a company when that company has been founded or is growing or scaling up and requires capital to grow. And so the two core sources of capital for those type of companies are angel investors and early stage venture capital firms. And so as an angel investor, we back innovation, we back startup companies who have a passion and a vision to grow. And that's essentially what angel investing is. It's not dissimilar to buying stocks and shares in a public company, except in this case, you're investing in a private company. The assets are not liquid in the sense that it's a longer term investment. And so if I bought shares in Macquarie Bank today and I changed my mind, I could sell them tomorrow. If I bought shares in a private startup company today, I really can't sell them tomorrow. So I think that's the first important differentiation, that they're earlier companies. They have higher risk, but they also have higher returns, and they're relatively illiquid. And probably the best example, and this is a very recent example over the last 2 weeks or so, Blackbird Ventures, one of Australia's preeminent venture capital firms, recently sold part of their shares in Canva in a secondary sale privately. Now, they sold their shares for 800 million and released that capital back into their investors and also employees. But to put it in perspective, that return was 2,600 times the initial investment that company made into Canva.
Nice
And
one.
so if you had put, I think it was 2013 or 2014 or 2015, I don't remember the exact year, but if you'd put $10,000 into Canva back then, it would have realized for you 2 weeks ago $2.6 million. And they're the type of angel returns that we're all looking for. Now, unfortunately, not every investment delivers that type of return, but that's essentially what angel investing is about. We're on the lookout for the Ubers, the Atlassians, the Canvas, the companies that start small and then grow. And every company started small. Uber started small. Amazon started small. Google started small. Google started in the back shed of some house in the middle of California. So every one of these companies that are now major companies all started small, and someone at some stage backed those companies.
Yep.
That's what angel investing is about.
And for yourself, one of the things, like I didn't mention in the intro, you're a significant angel investor. You have a portfolio approach. That's typically how angel investing works, doesn't it? We take a portfolio approach. It's not like one-offs. So for you, your expertise is early stage technology companies.
That's correct.
And so for yourself, do you mind sharing with our listeners, someone like in your position, what size is that portfolio for you?
So I think my portfolio of early stage investments at this stage is about 30 companies. One of my partners in Brisbane Angels, Richard Moore, has a portfolio of about 70 or 80. We generally recommend, and this is an important thing because I said earlier, there's high risk. Not all of these companies will succeed.
Yeah.
And so we're hoping for the ones that do. So we would generally recommend, that you build a portfolio of companies that spread the risk. So instead of thinking you can pick the next Canva, because I don't think anybody can, it's far smarter to deploy any of your investment capital into 10, into 20 companies over a period of time. And it's far more likely to be successful by having diversification rather than concentration. So I think that's very, very important. A lot of people, can go too hard, too early, trying to pick winners. They deploy all their capital across 2 or 3 companies. There's not enough diversification to spread the risk. So we would generally say to any angel investor, decide the amount of money you're willing to allocate to this part of your portfolio. We're not saying you shouldn't put everything into angel investing, but you might have property, you might have stocks and shares, you might have superannuation. You might allocate a certain amount of capital to investing in early stage companies. I'll make a number up. Let's say that's 100,000. Mm-hmm. Then we would generally say that you need to spread that money across between 10 and 15 companies to broaden out the portfolio risk. Because if one of those gives you those extraordinary returns, it will cover the losses on the other. Whereas picking 2 or 3, the probability of having success is a little bit lower. And I think we have to kind of leave our egos at the door and our bias at the door, that we all have a deep understanding of business. We have experience with technology. We think we can pick winners, but in all honesty, when you examine it, we really can't. And so the best way to, I suppose, ensure success is to try and build out as diversified a group of investments as possible, rather than just trying to pick 1 or 2.
Yeah, it's a really smart move, because if you're listening to this, these are high-risk startup businesses. A lot of startups can fail. And so, like you're saying, Brian, we can diversify that risk by investing across a wide range, like quite a large range, more than 10 to 15, ideally, investments. And in terms of the risk level, because there is specific rules here and in America around who is allowed to be allowed, is inverted commas, or who angel investing may suit. You know, you need to be a sophisticated investor. Do you want to explain what the guidelines are there, just in case if someone's listening and they're deciding, is this for me, because of
Yeah.
the perceived high risk value, well, the higher risk level with startups? What's the guidelines around being an angel investor?
Look, anyone can be an angel investor, but generally most of the angel groups in Australia only take money from what's deemed sophisticated investors. Now, sophisticated or wholesale investors is a term that's defined in the Corporations Act, and it basically, at the moment, it's have you earned $250,000 a year for the last 2 years, or have assets exceeding $2.5 million.
Yep.
So this is not designed for people who really can't afford to lose. And the sophisticated investor criteria is, from a government perspective, built around wealth as opposed to expertise. That's designed. The theory of what a government structured it like this is designed to say that you should only be investing in these early stage, high risk, illiquid companies if you've got the financial resources to be able to do so.
Yep. Yeah. And I think that's good. I think that's good advice anyway. Like this is not something, guys. Brian and I want to reiterate something here. Obviously, this podcast is not financial advice, by the way, but these investments are illiquid. So if you think you need the money, it's probably not the right vehicle for you to be investing in at this point. But also, one of the other sides of angel investing, though, there's the monetary thing. So, you can get these extraordinary returns, and we will come back to that in a minute. But one of the things that is another big side of angel investing, and this is, I think, Brian, all of us in Brisbane Angels know the passion of it comes from the original founder of Brisbane Angels, who, John, who founded it all those years ago. And you and Richard now have taken the mantle and are building on that passion for everyone. But there is another side of angel investing that people don't realize, that listeners might not understand. It's that passion side, isn't it? It's the feeling of giving back. Do you want to talk about that just for a minute?
Sure. Look, it's called angel investing because you are investing. It's exciting.
Yep,
it's
it is.
fun. And the key, you get a number of things. You get engagement with some very smart entrepreneurs, people who are at the cutting edge of technology, who are doing something novel and different that you may not hear about normally. And so I love engaging with the founders, listening to their ideas, and understanding that there's so much, I suppose, smart people and innovation in this country that, if we back those people, then Australia will be a stronger country overall. And so for me, when I came to Australia first, I would probably deem myself an economic refugee, having left Ireland in the late 80s, purely out of necessity. And so I think it's very important, not only for us, but for our kids, that we build an economy that's not purely dependent upon digging stuff out of the ground or farming, that's smart, creates high value jobs, creates opportunities for our kids. So that's a broader kind of a social impact that angel investors can have. We also, and hopefully, Matt, you've noticed it as well, the people that we talk to that have founded these really smart companies have an energy that just keeps you alive, and you learn from them, and they're just full of energy, and that dissipates. So like they're like an electric vehicle charging station. You know, you go in feeling a little bit dull, you're worried about your own business, and you see all this energy, they just light up the room.
Yeah.
So that's the second thing. And then because most of the angels, not all the angels, but most of the angels are, let's say, more experienced, 20 odd years experience in their own businesses or corporate business, can add value to guiding and mentoring those founders, which most of us do. And, they get value out of it, and we get value out of it as well. But probably the third thing is, in the case of Brisbane Angels, we're a network of members. So we have about 100 members at Brisbane Angels, and the interaction with the members is important as well. So there's a social aspect to it. Recently we had the Brisbane Angels conference where we had about 5 or 6 and venture capitalists come along and talk about their investment theses, and there's learning, there's networking, there's the social interaction. So you learn a lot, not only from the founders, but also from other members.
Yeah. And I want to build on that. Of course, at the Angels Conference, you had the best MCs, Brian.
We had two of the best MCs ever. It's a bit unfortunate that most of the feedback from the members said that Liz was much better than Matt.
Well, she got, so for those of you listening, I'm sure you all have seen Liz present. Liz was and myself were the MC at the Brisbane Angels Conference, and Liz got all these experienced angels, who've done sellouts, like Brian said, very experienced in business with hands on head and doing all the fun things, but it was a lot of fun. But so there is an important side to angels, which is the social side, I don't think people realize. But it's that passion side. That's what we noticed when we joined Brisbane Angels, like John started it in all those years ago, and he taught Liz and I, and you guys now are really big on this, is as an angel investor, if you're thinking of becoming an angel investor, we teach people about creating passive income, but angel investing on the surface looks passive, but it's not. The fun comes and the enjoyment comes, and I think the best value you get out of it as an angel investor comes from being participative. And I know that's something you're passionate about, encouraging people, if they're thinking about being an angel, become participants, volunteer for stuff to help out these entrepreneurs.
Yeah, and like I said, there's the networking side, but not only the social networking side. There's some of our members are far more experienced than other members. We get new members, but the best way to learn about angel investing is, to kind of participate. And I'm not saying go big and hard early, but come along to a Brisbane Angels meeting, or in Melbourne, a Melbourne Angels meeting, or Southern Angels down in Adelaide. There are a whole raft of angel groups across the country. Talk to the other members, learn from them, and you learn as well. So the network of angels will train and share their knowledge with newer angels. And then you get the opportunity to participate as heavily or as lightly as you wish. So,
and Brian, in your experience, this is your world, like your expertise is venture capital and angel investing in the startup space. Is it similar worldwide? Because we have a worldwide audience, like, there's Silicon Valley angels, there's angels all through, in America, it's obviously huge. Is it similar to here in Australia, like typically groups of 100 or so, ex-retired, semi-retired business owners? Does it work in a similar way in America?
It does, yeah. I mean, lots of angel groups in North America. The whole kind of thing started over there. Angel groups across Asia and Europe as well, and New Zealand. So one of the great things about angels is we share deals. Hypothetically, we're working with Sydney Angels at the moment on a deal that they're kind of leading, and they've syndicated that deal with Brisbane Angels. So we get a look at it. and it's very collaborative. It's not competitive.
Yep.
So we share deals with other angel groups. We've done deals with American angel groups in California, Tech Coast Angels, which is in California. We've done deals with them. We've done deals with a number of the angel groups in New Zealand, and that gives you even broader and international exposure as well. So it's always about, as an angel or as an angel group, you want to be able to see the best possible deals and then decide which one of those you want to invest in or not. And so at Brisbane Angels, even though we're a group, you don't invest in Brisbane Angels. You make your own individual decision to invest in a particular company. And then we pool all that capital together into a trust structure and invest as one entity.
Yep. So then, we get a position on their share registry.
That's correct. Yeah.
And so looking at how angel investing works, basically the entrepreneurs make an approach to us, to an angel group, and angel investors typically, well, generally, we like to think angel investors come before venture capitalists.
Generally, so what's kind of happened recently is there's been the emergence of seed stage. So there's a lot of acronyms in the industry, but seed is like the initial seed that starts the growth. And so there are a few what we call seed stage venture capitalists in the country, and we sometimes work with them as well. So the likes of Antler in Australia, Scalata Ventures, Folklore Ventures. We want to keep as broad and as cooperative an ecosystem going as possible, because sometimes you might have I'll use an example, a startup company raising $1 million to fund their venture, and you might have someone like Brisbane Angels lead it, and then other investors will come in, or sometimes it'll be led by a venture capitalist, and they might contribute $500,000, and then high net worths and angels will contribute a further $500,000 to flesh out the round. So,
So for an entrepreneur, someone listening to this, they've got I guess the question is, a lot of people ask us is, at what level should an entrepreneur approach their local angels group?
The first thing I'd recommend is go to the local angel group's website and learn what they say,
Yep.
And most of those angel groups will outline what kind of investments they're looking for. And I think that the great thing about angel groups is what they're looking for is very broad and diverse. So we're not going to invest in what I call a PowerPoint presentation. So we're kind of looking for some degree of product proof. So a minimum, what they call a minimum viable product, that there's some product in the market, it's gaining some traction with potential users. Doesn't necessarily mean they're making money yet, but they are in beta testing or they're trialing the product. So we look for some proof points that what the company is building is actually required by customers. Because ultimately, there's generally one reason startups fail, and that's because not enough customers are willing to pay the price for the product.
Yep.
It's quite simple. And in some instances, the customers are so willing to pay the price for the product that the startup is so successful doesn't need to raise capital from us or venture capitalists in the first place. And so, but even growth companies who may not need the cash initially may reach a stage where they're very successful here in Australia, and they're looking for growth capital to take it to the next step, which is to either scale it or grow it internationally. And they're the other use cases for the types of companies we support.
And then the process would be when an entrepreneur's made an approach to the angels, they've got to make what's called a pitch.
Yes.
Talk us through what that is, because it's a little bit like the Shark's Den. That's what you and Liz are and Richard and John and all the gang are really involved in. I know Liz does a lot of that.
So essentially, we have a very open process. So anyone can apply. And that gets screened to ensure it's suitable as an angel investment. So we don't do investments in property development, as an example. So we tend to focus more on high growth technology companies. If that passes screening, we generally then will invite the entrepreneur to come along to a meeting. And that meeting might have 50 or 60 people in the room and maybe another 10 to 15 people dialing in via Zoom like this. And the investor will make a 10-minute pitch. And so in 10 minutes, they're giving an overview of their business, what problem they're solving, what their solution does, why is it different, why will it be successful, and how they intend to grow this into a sizable company. And then we have some time for Q&A, where we interact with the founder and ask some questions that maybe they haven't covered during their pitch. And then the founder is asked to leave the room and we have a 10-minute discussion amongst ourselves. Now, that's not to make the investment, but that's to ascertain whether there's a degree of interest amongst our members to proceed with the deal. And if the pitch has gone well, what generally will happen is there'll be a lot of people saying, I'm interested. I'm not a commitment, just I'm interested in investing. And then what we will do is someone who might have some domain expertise in online business would be asked to lead the deal, and they'll interact with the founder and we'll do some due diligence. We check things out. And then if all that pans out, we open up the deal for investment, and then individuals, you, me, Liz, others, will say, I'm prepared to invest X amount in this company. We pool all that together, and then Richard and myself at Brisbane Angels will do what we call the deal completion process, all the boring legals, paperwork, asset checks, et cetera, and then we'll complete the deal.
Yep. And then the entrepreneur gets the funds and they can allocate those, and then we've got a certain percentage of the company.
Yeah, we will either have equity or a safe note or convertible note, but essentially we've made an investment in the company, and we're hoping that it can turn into a Canva. I mean, about a year and a half ago, Brisbane Angels were one of the early investors, and maybe some of your listeners will be familiar with Clipchamp. So Clipchamp is a local Brisbane business that was acquired by Microsoft about 24 months ago. And that delivered a 43x return for early investors at Brisbane Angels. We're investors in Vaxis, which is a local Brisbane company as well, which is currently building a $150 million factory here in Brisbane, which supports, instead of having a needle, it just has a patch which delivers vaccines through a patch system, really innovative. We're an investor in Arcos Labs, which is, again, Brisbane-based. We haven't exited that yet, but it's going really well and is one of the top cybersecurity companies globally. We've done investments in businesses like HatchTech, which was a spin-out from the University of Queensland, a kind of a drug discovery, which was sold off to a global pharmaceutical company a few years ago. So we've had a lot of successes. We've had some failures as well, but that's part of the game. And so
Yep.
you need those successes. And people may not be fully aware, Brisbane Angels kind of operates with not a lot of publicity. But if Brisbane Angels was a venture capital fund, the value of its investments today would be about $86 million.
Yeah,
So
not through today.
it's not an insignificant group. It's not an insignificant amount we've invested here in Queensland predominantly, but not all our investments are primarily in the Queensland region. We do investments in companies across Australia. So, founded back in 2006 by John McTaggart and going from strength to strength.
Yeah, and it's a big, we should give a special mention to John. He is a big thanks to someone like John who started this, and then, his passion and drive has helped it to become what it is today. And then yourself and Richard taking it to the next level, the next part as John moves on to his retirement. And but it's a big thanks to, and you'll see this around the world if you're listening to this, angel groups. My observation is angel groups are driven by people. It's not, it's driven generally by passionate ex-business owners who are successful, and it's a way of giving back, because at the end of the day, we're giving back to these younger entrepreneurs. We're mentoring them when we do this. And I think that was one of the exciting things for Liz and I when we joined all those years ago, to realize, this isn't just a passive investment thing.
No.
This is we're giving back, and it's almost like a community thing as well, Brian. That's why I mentioned in the intro yourself and John, very well, and Richard, very well connected here in Brisbane. And I know we keep referring to Brisbane, but I think if you listen to this, you'll see it in your local cities. Local angel groups are very committed to their local community and especially their local startup scene. Is that your observation even worldwide?
Yes, very much so. I mean, you have to understand what you're investing in.
Yeah.
And it's easier to understand when you can have a direct interaction with the founders. So, we're Brisbane Angels, but we invest across primarily Australia and New Zealand. And this what you said, Matt, about participation is very important. Where Brisbane Angels is a not-for-profit member group, so it's not designed to make massive profits for a venture capital fund or venture partners. So the BA group, as we refer to it, Brisbane Angels, is a member group, and any of the cost or the fees that members pay is just done on a break-even basis to cover the cost of operations. So if you invest with a venture capital firm, you pay significant investment fees, usually 2% per annum of your committed funds. And then if the deal is successful, you pay generally a 20% carry. So from an economics perspective, that you're more active and more participative, you're doing some of the work that you could outsource to a venture capital fund. If you don't want to be active, you can always put the 100,000 or 200,000 as an investment with one of the venture capital funds, and they'll do all this for you. But I think it's a lot more fun.
It is. Yep.
It's a lot more exciting. You learn a lot more by being more active and more participative in this whole process. And that's that's as much part of the fun as the investing part.
Yeah. And that's certainly been the case for for all of us angels, and it doesn't matter what angels group you're in. I think that is a big fun part of it. We're actively involved in the due diligence, in the discussions around it, actively involved working with the local entrepreneurs, and you're dealing with people here. It's a lot of fun. One of the things that did surprise us, Brian, when we first joined all those years ago, because we come from a world where you of all people know our world back to front because your previous experience with online business, making money, taking it to a listing on the Australian Stock Exchange, all that sort of stuff. What our world is dealing with successful or already successful businesses. We buy and sell them. And so we've got runs on the board and it's all based on, cash flows, existing profits and things. What's shocked us with angel investing, and for any of our members listening here, there's a lot of very successful business people on this program, okay, Brian, and they're going to get the same shock as well. The way you value startups, like Liz and I could not get it. I remember we used to say to John all the time, explain it to us again. Like we're just used to, 3 times the profit of a business. And, we can get a pretty good idea, and doing due diligence is pretty straightforward. With angel investing, talk us through that, because that is, to me, still to this day, the bizarrest thing. How do you value these startups? Because they don't have profit. They're not profitable. So what goes into, when you see these, it's like on Shark Tank, they say, well, we'll give you 50 grand for 20% of your business. How are you valuing these businesses that have no profits because they're startups?
So let's go back and start with what you're more familiar with. You're buying an existing business which has revenue and profits. And so you would normally value that business on a multiple of earnings. And so, if you look at any of your investments in superannuation or direct shares, you have a thing called the price earnings multiple. And, I was looking at the price earnings multiple today for Commonwealth Bank, and it's about 20. So essentially, the price of the CommBank is 20 times its earnings. Very stable, well-run company, not likely to fail tomorrow, hopefully. And so if you were to say, I'm going to buy into a bank, you would compare the price, which is the multiple you'd pay, relative to, let's say, CommBank. So you rightly point out that a lot of these early stage companies do not have that. So you can't take what I'd call the traditional kind of merger acquisition approach that you and I would be more familiar with. But here's the important thing. You're trying to value potential. And so it's more opaque. It's not as clear. There are some benchmarks. And so being part of an angel group, trying to do this on your own is nigh impossible. But
that's right.
We have benchmarks. We see, hundreds of companies a year. So Brisbane Angels last year invested in around 30 companies.
Yep.
So we know where those companies are, what stage they are, what industry they're in. We see all the comparable kind of valuations. So it's quite easy after a while, not initially, to say, okay, this company doesn't have a product. It hasn't even built a product yet. It's got no revenue. They haven't trialed it with any customers. It could be quite big. And they value their company at 20 million. We would probably say goodbye, Yep. But if that same company came back and said, we've got all the same characteristics, we've got a lot of potential, we've got a great team of founders, and the valuation was 2.5, 3 million as an example, we'd probably say the bet on the potential of that group of founders to grow the company to where they want to go to is worthwhile. So it's a bit of there's some benchmarking involved. It's a bit of a dark science, I must admit. But that's the benefit of being a part of an angel group, that, the other angels might have been involved for 10 years. They would have seen thousands of companies and comparable valuations. We keep that data and we use that data, and we try to be fair and reasonable. But yeah, you're probably right. It's very hard It's a bit of a dark art. It's completely different to the valuation that you might apply to what I call a normal acquisition of a steady state business. But you have to keep in mind that you're buying in. I like to think of these not as investments, but almost options. So they're an out of the money option on potential.
Yep. Yeah, and that's probably a really accurate way of looking at it, actually. And one of the things that I've observed, and I know, this is talked about in angel investing circles, at the end of the day, a heavy weighting is we're investing in the entrepreneur. We want to see someone, do we trust them? That runs on the board. What are they like? What are they going to do with the money? Are they going to stick this out? Would that be something you would agree with as well as the entrepreneur?
Look, I've never seen any investment go through where we were not comfortable with the founder. That doesn't necessarily guarantee success, but we're backing a founder or a founding team to deliver on what they promise. Now, sometimes that works out and sometimes it doesn't. But yeah, it's almost like in your own business when you reach that stage where you've grown and you're bringing in executives to help you run the company. It's a major decision that can I give up some control so that this individual, I'll pay them a lot of money to help me run the company. You're backing individuals. And so again, that's where experience comes in. And that's generally why a lot of our members have, they're not out of the business school at UQ.
No.
They're not 22 and have finished an MBA. They're probably 40 plus. They've got 20 years of experience. They've either had corporate experience or startup experience. A lot of our members have done their own startups, exited those startups. And so they have innate knowledge of what to be on the lookout for, what are the danger signs, and they pass that knowledge back to the founders as well, so that ultimately we want to be aligned with the founders. We want to build a great company with the founders so that the founders succeed and the early stage investors succeed as well.
Perfect. Well, Brian, thank you so much for that, for a bit of a an intro to what angel investing is and what to expect if you're an entrepreneur. I think that's awesome for our listeners. I want to say a big thank you for coming along to share that today. And so hopefully if you're listening to this, if you're interested in angel investing, either being an angel investor or being an entrepreneur, obviously reach out to your local angel investing group and just have a chat to them. And and Brian, I want to say a big thank you again for coming along and sharing your expertise today.
No, Matt, thanks very much for the invitation. Look, anyone who's interested, feel free to reach out either to Matt or me. And we're always happy to explain things in a bit more detail. But thanks for inviting me along. I hope you and the listeners got something out of it.
Awesome. Thanks, Brian.